Alright, welcome to the video. In this video, I'm going to be going over how I passed this evaluation for swing trading. We're swing trading for about 2-3 months, and this account I think was about 1 month old, I think, or maybe 1 and a bit. So it's gone well. I passed the account pretty recently, and as you can see, I have the lovely certificate here for Alpha Capital Group, and it's only a 10k, but it's still pretty decent. So what I'm going to do is just go through all the setups I took and effectively just kind of explain them and stuff and show you my journal. So let's get started. The first setup was an NZD JPY, and that is 4 for the third, this trade here. Now, this trade here, I had high confidence. Now, what I use for these setups is a thing called my TradeSafe, which is a fundamentals website, and it has a fundamentals table. So if I just quickly go to it, this is basically what gives me the bias for all these setups. It takes in all this macro data, and it kind of explains it. And if I just move my thing, you can see it has the list of all the setups here, the score and the macros, plus of course currency, live news, core reports, Barron reports, risk sentiment, DMX, calendar, and a blog as well. This is what I use literally for all my kind of analysis. So let's look at the charts for NZD JPY and see what kind of trade I was looking at. NZD JPY, if I just extend that a bit. Right, it was this trade, and it was actually quite unfortunate. It did end up going a bit into profit. Now, I think the reason this trade actually lost was the NZD had some bullish news and some bearish news, and of course NZD is the bottom one, which yes, the NZD is a top pair, which means it basically went down. The NZD had bearish news in this situation, so fundamentally it was a good trade. The fundamental score was high, but of course that can change. And just to quickly explain the strategy, you get the secret sauce, literally break and retest. So you have a market structure like this. You basically draw like resistance and support at all the tops and bottoms of the peaks and troughs, and if price comes down to retest it and there's probably a confluence or the fundamentals are strong, you can place it long. It's super simple yet super effective. I trade on the 4-hour time frame, and these technicals alone have like a 50% win rate. So if you are good at the technicals, good at the fundamentals, you can probably have a very, very good trading strategy. And yeah, this trade was quite unfortunate. It's quite unfortunate to start the account off with a loss, but it is what it is. And I've risked 2% on all trades all the time, on eval, second stage, all of them. So in this case, you can see we had support here turn into resistance, resistance turned into support. With a second area of resistance here, it broke through, came back down to add to support. I entered, and unfortunately we just got stopped out here, and then price decided to go down, and it seems like it's making a comeback. So this was an unfortunate trade, however it is journaled. Now if I go back to my dashboard, let's have a look. So that was NZD JPY, ignore that, that's not real. But this is my current P&L there, and as you can see, I'm starting to get more like profitable. Well, hopefully. I'm starting to get better at swing trading. Pound USD was the next trade. Pound USD, and it was on the 19th. And this trade here, I think, was the same situation. We had news. So a lot of these trades, the reason you lose is because new news comes in that goes against the fundamentals. As you can see, the fundamentals here was -8. That is super strong. Anything less than -5 is bearish, and this is -8, so it's very, very bearish. As you can see in the notes, it would have won if there were no news. And this setup was really nice in my opinion. So if I go back to Pound USD, and I actually think I removed the setup because I wanted to do some analysis. Let's see what it was. There. It was here. Okay. Yeah. And this was around the wartime. And basically what happened is that inflation pressures were actually increasing. And this is for the pound. Obviously, the US dollar has been appreciating a huge amount during the war. The pound it was actually quite weak. As you can see, it was traveling all the way down here. So there was a lot of setups that we potentially could have got. I know a lot of people won shorts off this area here and this area here. I didn't. I decided to enter here. And effectively, the war basically made inflation risks for the pound a lot higher, which meant that the Bank of England was forecasted to rate hikes. And of course, if you know what a rate hike means, that means interest rates increase, which means the currency appreciates because more people want to save their money in that currency. Institutionally, it doesn't really matter about retail. But anyway, as you can see, this caused a pretty fat reversal. The trade was going pretty nice, and then it just huge candle reversed on us. And it seems like now we'll probably be going up and up and up until the war ends and inflation pressures cool off. So this again was quite an unfortunate trade. but you just have to suck it up because this is what happens when you swing trade. There's news. You're susceptible to news. Now, the next trade we had was US30. US30, this is the best trade I've ever placed in my life, and this was a win. And I got a 1 to 3 on this trade. So normally I risk 1 to 2, but if I'm pretty confident or I feel the fundamentals are in my favour, all the technicals are in my favour, I'll aim for 1 to 3 or even higher. And in this case, I actually trailed my stop loss for a while, and you'll see what I mean. So here the fundamentals weren't actually very strong, but that's not the point, and you'll see what I mean when I open up the chart. So if I open the US30 right now, which is Dow Jones, I didn't hit this trade, you can ignore that. By the way, it's crazy how they've been reacting so quickly back, coming up to all-time highs. So what happened here? The reason I took this trade is fundamentally there is a retest zone. You can see here there's support, it breaks through, and if I zoom in you'll be able to see it turns into resistance here. It taps off it once, goes down, and taps off it twice, and this is where the technicals lined up for my entry. There's also a supply zone right here. A supply zone and a demand zone are confluences, just like an imbalance. Now, you may be thinking, why would you even short the US30? The war broke out. And in fact, I was looking at this trade for a while because we were thinking it was going to happen anyway because they're very high. And my cousin, definitely thought there would be some sort of crash soon. So we were kind of looking for shorts, like just to have a look. And then the war broke out. So there's news of the war. And I was like, all right, this is perfect opportunity because I know Trump's been building up his troops. I kind of know him. I know he's thinking, I'm going to place a short. And the bias for this is not the fundamentals, it's geopolitics. And this is why swing trading is so good. You don't always need to have a fundamental bias at all. Like you don't, in this situation, the interest rates didn't matter one bit. The PMI, like all of that stuff just did not matter. What mattered here was the geopolitics and the fact that US was going to Iran to potentially start a war and bomb them pretty much. And as you know, this is a risk off event. And if I just go to my risk sentiment calculator, this shows it really well. It's just in the fundamentals. You can see how quickly we went to risk off. And you know what risk off means? Investors want to take their money out of high yielding assets and put them in something safe, like cash. It went risk off. Go back to the charts. The indices went down. And the DXY appreciated a huge amount because people held cash instead of indices. That was my thinking. War means people hold cash, they don't want indices. So what did I do? I shorted the market and it worked. And well, this trade is great and bad because I actually ended up running to a 1 to 5, almost a 1 to 6. My aim was a 1 to 6 in this trade. And it's really annoying. I was trailing my stop loss and minus like back 2R. And it got to here, it came back and it just hit my trailing at 1 to 3. I could have held for 1 to 6. Literally, it hit a 1 to 6 down here. I was literally at 1 to 5, like it was on my balance, but unfortunately I didn't. And I ended up getting stopped out by my trailing stop loss, which is a bit unfortunate. Let's make a reset for that bit. So honestly, it doesn't really matter. It was still a great trade. I'm really happy about this. The geopolitics like played out perfectly in my opinion. And as you can see, we've had a huge regaining strength. I'm personally going to avoid these kind of assets for a bit because it doesn't really make sense to me why this is going up right now. Very risk on right now, as you can see in the risk calculator. However, this was probably the best trade I took. Now, if I go back to my journal, next trade is Eurochef, and that was on the 31st of the 3rd, and this was a win. This trade was pretty clean. Now, the funny thing about swing trading is, although you lose quite a few setups because of news, luckily you also end up winning for you as well because, you know, it's luck on your side. And to be fair, this one wasn't exactly luck. Now, let's talk about it. What was it here? One because of news, not surprising news. Yeah, that's what I was saying. We were kind of thinking about this news. In most, when you like start swing trading a lot, it's not really luck. It's like you have a bias and you have a slight edge. Like my edge for the Iran war was like, they're going to go to war. That was my edge. In this one, I was like, all right, inflation is high. I think in this next news release, it's going to beat because inflation is very high due to the war. And that's what ended up happening. And I won 1 to 2. If I go to the charts, Eurochef. And yeah, this is nice. I was surfing. I went surfing. I placed a trade before. I went surfing. I came back and it smashed TP, which was amazing. To be fair, I was going to hold for 1 to 3. I tried my stop loss and it just trailed it at 1 to 2, which is fine. And as you can see, it kind of just came back to, you know, almost break even, which is good. This trade here, you can see, Right, so what happened is we had broken out this huge level of support down here. We had broken out, and we were obviously retracing back to that support. So what was amazing is that I could just have my TP at this level of resistance, and of course, as you can see, it's reacted off pretty well. Now, we have a support area here. Turns to resistance, this is a strong area of resistance. You can see it's a strong zone because things react off it. You can see here, there's 1 reaction, 2 reaction, 3 reaction, 4 reaction. And as you come over here, you can see it taps back into the zone and gives a very strong reaction. And I ended up entering on the second bullish candle because I like a bit of confirmation. Like, you can't always just enter on the first candle. And yeah, it hit 1 to 3 pretty quickly. Now this was Euro Chef. This is because it's actually the same thing with the pound USD, except it was in my favor. As you can see with the pound USD trade, what effectively happened was the pound appreciated because of the interest rate expectations. That is exactly what happened with the Euro Chef, except it just went in my favor, which is good. I was learning from the past mistakes, and in this case, I think they increased. I've actually forgot. I don't think it was a rate hike, but it was something to do with inflation, and it was something to do with the war. I should probably kind of note down what the actual news event was, but it was a decent news event, and we got the win, which is very nice. So that was a 1 to 2. Next one is NZD USD, and this was a loss. And this one again, yeah, this one here was a fundamental kind of geopolitical trade that I had my bias on, and it ended up not working. So this was the opposite of some of the trades we've taken. And as you can see here, the point of this trade was betting that Trump would carry out his word and strike Iran. He did not. He basically did not. He did not do that. He did not strike Iran. He gave them a ceasefire. Now, if you look at the setup, NZD USD, yeah, we basically caught the wrong end of the stick here, which is quite unfortunate. So what happened here was we have this kind of general level of support here, right here. As you can see, it's very strong. 1, 2, and actually you can probably extend it and have this area here. This is support. Now, what I saw is basically, and also there is resistance here. So what happened, I saw price came out, kind of went down to this area of support, acted as resistance, came back to support, and then I was expecting more resistance, as you can see from here. And you guys got to think about this strategy in like levels. Like, you always got to think about all the levels, because this is literally how the markets work, to be fair. Like, the strategy is so simple but so effective. There's always levels. You can see there's always levels. Price reacts off key levels in the market. You don't have to overcomplicate it by doing some bullshit. And this is exactly what's happening here. It's quite like hard to kind of see because I got hella squares on my chart. But all these squares are just key levels. Key levels price reacts off, and it all comes together to form a setup. Now in this trade, I was bearish. The NZD was extremely weak because of just a variety of factors that was on our fundamentals table at the time. However, the US dollar was insanely strong because of the war. I was expecting that to continue. I was expecting Trump to continue on his word, which was a bit unwise, and effectively go into Iran hard, because that's what he was saying. He was saying he didn't want to ceasefire, he wanted to go in hard. An hour before the time it was meant to happen, he declared a ceasefire for a couple of weeks or whatever. So that didn't happen. But the premise of this trade was that Trump would go in and it would make the USD appreciate even more. So what you guys have to think about is that when this stuff happens, the US dollar appreciates. It happens all the time. People want to hold cash. They take cash out of gold, indices, all of that stuff, out of crypto. They hold cash, and the cash is the US dollar. Even other countries hold the US dollar. So that is what I was expecting here. Unfortunately, he didn't. He did a ceasefire. What does that mean? That basically meant that people suddenly risk on. They were like, alright, we don't need to hold as much cash because it's a ceasefire. Not everything's going to be bad. So added more money to indices, gold, put in savings, bonds, whatever. And that basically led to the US dollar weakening. This was not the New Zealand dollar. This was the US dollar weakening, which made this shot up. And I'll probably be able to find it. This was on the 7th of April at 10 p.m. There we go. This is exactly what I'm talking about. The US dollar weakened a huge amount. A massive amount. If I can find the percent in that. It was at 10. Yeah, so it's roughly here. That's around 1.3%, which is a huge amount for a currency. And that is basically why I lost the trade, because of the geopolitics. So you win some, you lose some. But I didn't really mind. I think it was a risk I was willing to take. and you have to take risks. Unfortunately, in these markets, it's very hard sometimes to get a fundamental bias because of everything that's going on in the world right now. You sometimes have to look at the news and get your bias off the news instead, which is what us and the group have kind of been doing. What else? Last trade, I believe, AED NZD, and this is an amazing trade. I basically scaled in at 1-to-1, and I'll show you. So it's not this trade on the left. I was taking on another account. It was these two trades here, and the fundamental score was bullish. I only really take trades that are strong with fundamentals or geopolitics. I never take like neutral trades ever. I'm a fundamentals trader. And yeah, the fundamental score was very strong. 6, 7, it's above 5, which is exactly ideal. Now if I go to AED NZD, and I'm actually not in this trade because trades I'm currently in right now is GBP CAD, which is looking a bit hairy. This is actually wrong. It should be down there. It's looking a bit hairy, but I've got faith. And AED CAD, which is also looking quite hairy, and it seems to be depreciating right now, which is not ideal at all. But and this is a trade I'm taking on my second stage, and I'm risking 2%. So if it wins, it loses. It's interesting. I'd rather wins, but apparently all like the first trades you take on any funded, you always lose. That's the rule apparently. So hoping that doesn't happen here. Now, what is going on in this situation? Well, first of all, we got a very nice win here. This is a textbook trade. Resistance turns into support. Like, this is what I'm talking about. Resistance turns into support. Perfect market structure. Entered the long here off the confirmation. It hit, main new high, retraced, and I was kind of looking for a new area to enter. So my kind of bias for this, the resistance was this kind of zone here, and this is a big zone. So often in swing trading, it's not mechanical. Like, you can't like mechanically. I don't know if some people can. Like, you can choose the top line, but for me, I can't mechanically choose these zones. Like, it's about intuition. So I was like, all right, we've had strong. You can see like the candle. It's a candle price action. Heavy resistance here and a bit of good resistance here. So my zone was like, all right, in the middle. So I'm gonna wait for price to retrace back to this kind of area, and I'm gonna see what happens. It did retrace. It retraced well, and it retraced down to this demand zone. This is actually often what happens. It sometimes comes down and then comes further down and then goes up, and this happens all the time. So this is exactly what happened here. It came to this demand zone, and that's what I like. I don't really like setups which only retrace like a little bit. I want setups which retrace a lot, like in terms of reports. So say this was here. I don't want a setup that retraces a bit. I don't like this setup. I like them when they retrace like a decent amount, like hopefully more than 0.5 of the fib. And that is pretty much what happened here. I entered off the confirmation, not really in drawdown for any of it except here. Went up, and then what I did is when it broke past this level here, I decided to scale in. And this is what us in the group have been doing recently. Scaling into setups. This is when you add another position and remove the risk of your first. So you're still risking the initial 2%, which is what I risk, but you've actually got 4% worth of like leverage in the market. So what I did, as soon as it broke through here, stop loss to break even, and I entered another one, and I just aim for 1-to-1 because I can, because that's all you need to pass a funded. If I was doing it properly, I would do this one for 1-to-3 and this for 1-to-2, and hold it, which is very nice. But this is the last trade I took that passed my funded, and I took another trade where I scaled in on Euro AUD, and this was the example of a 1-to-3 and 1-to-2. You can see it had the retest zone, went down, and then it broke through this level of support. I was like, all right, I'll scale in. I'll put this to risk free and aim for 1-to-2 here. It hit very nicely. Again with this setup, this did run down to 1-to-5 or 1-to-4.5, and I should have taken profits, but instead I trailed, and I ended up trailing. So it is what it is. But yeah, the AED NZD was the last setup I took. Kind of wishing I entered right here instead, but unfortunately it just takes time with swing trading. Everyone does it at a different rate, and that effectively is what got me to get this funded account for the stage 1 passed, which is very nice. And if I just go through my journal, you can see I'm kind of getting more consistent with my trading. From here, if I go up, that is like the turning point where I've been kind of consistent. The first stage was kind of me learning. The second stage is me being like executing, if you say. And you can feel it by time. Like this point here, from then I've had really consistent P&L, and I hope that goes further, which is what I'm really interested in. But yeah, I'm up 10R since I started, and I started basically the end of Jan to start Feb, May. So I've done 3 months, and I passed this first stage in about a month and a bit. It is very good. And if you just see here, I basically post all my trades. All my trades I post in my kind of channel, and this is as where I put all my analysis. I love putting analysis for my setup. Like, you have to basically explain why you think it's going to go up, and that is what you do. You put in all your analysis, and I've been doing this since the start, and I've actually net positive, which is amazing. So before this, I scalped. It didn't work at all, but now I am net positive, which is great. So yeah, that is pretty much everything. If you're interested in learning how to swing trade, join the Discord. It's free. It's in my bio. If you want to use this software, TradeSafe Plus, it's also in my bio, and this is exactly how I get the fundamentals for everything. And yeah, I'm up, what, 11, so 17%, which is good. But in RR, I'm up 10R, which is great. And yeah, thank you very much for watching. If you're interested, as I said, join the Discord. It's free. Give me a subscribe or whatever. And yeah, sign up to TradeSafe. Thank you very much. See you in a bit.